Before Wall Street ever existed, before banks, skyscrapers, credit cards, and CEOs, there was a man in a robe. A quiet, soft-spoken priest who spent his days teaching math and his nights staring at dusty ledgers under candlelight. He wasn't chasing riches, he wasn't born into power, and yet somehow this humble friar created the blueprint that still controls the world's money today. Think about that for a second. Every time you swipe a credit card, every time a company calculates its profits, every time a bank decides who gets a loan, you're witnessing the echo of one man's system. A system that started not in a boardroom or a trading floor, but in a monastery. It sounds like something out of a novel, a priest inventing the tools of capitalism. But it's true. Long before Wall Street brokers and investment bankers ruled the world, a Franciscan friar named Luca Pacioli quietly changed everything. He didn't invent money. He didn't even handle much of it. What he invented was far more powerful, a method to track, measure, and prove trust. Because back in the 1400s, money was chaos. Merchants traveled from Venice to Constantinople carrying chests of coins, terrified of being robbed along the way. Debts were remembered by handshake, promises were sealed with a nod, and fortunes, entire family empires, could vanish overnight if one man failed to pay what he owed. It was a world built on faith, but not the kind preached in churches, the fragile kind that could break with one bad deal. And that's where this friar enters the story. Pacioli looked at the confusion around him, the endless debts, the fraud, the guesswork, and decided to bring order to it all. He believed that if humans could measure trust the same way they measured numbers, they could create a world where trade, not luck, decided success. So, in 1494, inside a small Italian town surrounded by merchants and scholars, Pacioli published a book that would outlive him by centuries. Hidden inside its pages was a simple yet revolutionary idea: double-entry bookkeeping. It might sound boring at first, but that's only because we take it for granted. Without it, modern banking wouldn't exist. No balance sheets, no credit systems, no reliable trade between nations. It was the difference between guessing your wealth and proving it. To Pacioli, money wasn't about greed. It was about clarity. Every transaction needed two sides, a debit and a credit, just like every human soul had both sin and virtue. It wasn't just mathematics, it was moral balance made visible. And here's the part that's easy to miss. Pacioli didn't create this system to get rich. He did it to help others live honestly. In a world ruled by suspicion, he built a framework of trust, a way to turn promises into proof. He had no idea his invention would fuel the birth of capitalism, the rise of banking dynasties, and even the creation of Wall Street centuries later. Today, we think of finance as cold, mechanical, and purely material. But the truth is, its roots are spiritual. The first people to guard wealth, record debts, and ensure fairness weren't bankers, they were priests. And that's where our story really begins. Because before Pacioli's invention changed the modern world, there were others, long before him, who did something similar. Men in temples, dressed in robes, who protected treasures and tracked offerings. They were the first to understand a simple but powerful truth. Money is trust. And those priests, thousands of years ago, were the very first bankers.
Long before skyscrapers lined Wall Street, before vaults, interest rates, and financial charts even existed, money was sacred. It was something people didn't just count, they worshipped. In the ancient world, wealth and faith were inseparable. If you wanted your fortune to be safe, you didn't hide it in your home, you offered it to the gods. Because to most people, the only beings powerful enough to protect your valuables were divine, and their guardians were the priests. Thousands of years before Luca Pacioli ever held a pen, the earliest bankers on Earth weren't wearing suits, they were dressed in robes, chanting prayers inside towering temples. Let's go back around 4,000 years ago to ancient Mesopotamia, what's now modern-day Iraq. This was the birthplace of writing, law, and surprisingly, the first financial system in human history. At the heart of every city stood a temple. Not just a place to worship gods like Enlil or Inanna, but a kind of sacred business hub. People brought offerings of grain, silver, or livestock, and the priests carefully recorded each one on clay tablets. Every mark, every wedge-shaped symbol pressed into the clay was a record, proof of ownership. These priests didn't just pray, they kept ledgers. And over time, those ledgers became something extraordinary, the first bank books. Here's the incredible part. These early records didn't just track wealth, they moved it. When one farmer left grain as an offering and another needed to borrow grain to plant crops, the temple managed the transaction. They'd lend grain to the second farmer and in return expect a portion of his future harvest as repayment. That was interest. Without realizing it, the priests had invented credit. Now picture the scene. Inside a vast ziggurat, with walls glimmering from torchlight, a priest dips his stylus into clay and presses symbols that will outlast his lifetime. The air smells of burning oil and incense. Outside, merchants are loading donkeys, preparing to travel across the desert. But inside that temple, in that moment, something world-changing is happening. A system of trust is being written down. Because that's what money really is. Trust made visible. People didn't need to see their silver or their grain. They trusted the temple's word. And since the temple was the center of society, its records carried divine authority. In a sense, the gods themselves guaranteed every transaction. Those priests had stumbled upon one of humanity's greatest inventions, the ability to store and multiply value using nothing but records and faith. They turned promises into proof. From Mesopotamia, the idea spread. In Egypt, temples of Amun managed grain storehouses that fed entire cities. In Greece, sanctuaries like Delphi became financial centers, holding deposits for city-states and even issuing loans. The Romans followed suit, with temples serving as trusted safes for citizens' savings. Each civilization added its own flavor, but the formula stayed the same. Faith plus record-keeping equals trust. It's fascinating. Religion gave birth to finance, and trust gave birth to money. For centuries, the two were one and the same. The holiest men were also the safest bankers. But as empires grew and trade expanded, that trust needed to travel farther. You could no longer rely on one temple when merchants began crossing continents. They needed a network, a system that could protect money across thousands of miles of dangerous roads and hostile borders. And so, as the ancient temples faded into ruins and new religions rose, another kind of financial guardian took their place. They wore crosses instead of crowns, and swords instead of robes. They called themselves the Knights Templar. And they would take the divine idea of temple banking and turn it into the first global financial network the world had ever seen. By the 11th century, Europe was waking up from centuries of darkness. Empires had fallen, kingdoms were rising, and the roads once patrolled by Roman soldiers were now crawling with merchants, pilgrims, and opportunists. Trade was coming back to life. But with trade came risk, and risk meant fear. Travelers heading to the Holy Land carried coins made of silver and gold, tucked beneath their robes or hidden inside belt pouches. But there was a problem. Every road was infested with bandits. Every ship risked sinking in a storm. If you lost your coins, you lost your life's fortune. And that's where one of history's strangest inventions appeared, a solution born not from kings or merchants, but from monks in armor. They were called the Knights Templar, a religious order of warrior monks sworn to poverty, chastity, and obedience. Their mission? Protect Christian pilgrims traveling to Jerusalem. But somewhere along the way, they discovered a new kind of power, one not forged from swords or shields, but from trust. You see, the Templars had monasteries scattered across Europe, from London to Paris to Jerusalem. Each one was connected by a strict internal hierarchy, letters, and a shared vow of honesty. And people trusted them, deeply. After all, who would dare steal from a holy order? Soon, pilgrims began leaving their gold in Templar commanderies before setting out on their journey. The knights would write them a letter of credit, a simple parchment note that recorded the deposit. When the pilgrim reached the Holy Land, they could visit another Templar house, present their note, and withdraw the equivalent amount in local currency. It was genius. No more hauling sacks of coins across dangerous terrain. No more fearing bandits or pirates. Your money could travel faster and safer than you ever could. In a way, the Templars had invented the first international banking network. Their houses acted like branches. Their letters were early versions of checks. Their reputation, their vow of faith, was the guarantee. This system quickly grew beyond pilgrims. Kings began storing their treasure with the Templars. Nobles deposited estates. Even the church borrowed money from them. The Templars became so powerful that their vaults often held more gold than entire kingdoms. And it all ran on the same invisible fuel that drove those ancient temples of Mesopotamia: faith. But now, it wasn't the gods protecting your wealth. It was men who served God. Over time, the Templars refined their network. They kept meticulous ledgers, recording every transaction with precision. They lent money at service fees, technically not interest since the church condemned usury, but everyone knew what it really was. They financed wars, construction projects, and even royal debts. By the 1200s, the Knights Templar had evolved from holy warriors into something else entirely: a multinational financial institution. Their reach stretched from Scotland to Syria. Their clerks could move funds across continents faster than most kings could send a messenger. And with that came influence. Real influence. If a monarch couldn't repay his debts to the Templars, they could pressure him quietly or publicly. Their wealth was so vast that even rulers owed them favors. For centuries, they operated under a veil of sanctity. Holy men trusted more than any merchant. But power, as always, attracts enemies. By the early 1300s, rumors began to spread. Whispers that the Templars were hiding secret treasures, that they'd grown too rich, too independent, too untouchable. And when a desperate king, Philip IV of France, found himself drowning in debt, he decided there was only one way to erase it: destroy his creditors. On Friday, the 13th, 1307, the king's soldiers stormed every Templar house in France. The knights were arrested, tortured, and accused of heresy. Their order was disbanded, their leaders executed, and their assets seized. But their legacy didn't vanish, because while their bodies were destroyed, their idea survived. The Templars had proven something no one could unlearn: that money could move through information, not just through metal, that faith and reputation could secure wealth across oceans, and that trust, written down, was the strongest form of power a man could possess. Their letters of credit inspired generations of merchants. Their ledgers inspired record-keeping. Their system of trust inspired future bankers. Centuries later, when Italian merchants and bankers began reinventing finance in the Renaissance, they were unknowingly continuing what the Templars started. But this time, it wasn't warrior monks who kept the books. It was scholars, mathematicians, men who saw numbers not as symbols of wealth, but as proof of truth. And among them was one quiet friar, a teacher named Luca Pacioli, who would take everything the world had learned about trust, trade, and ledgers and turn it into the foundation of modern banking. By the late 1400s, Europe was humming with change. Sails were catching wind across the Atlantic, printing presses were spitting out books, and gold was flowing faster than ever through the hands of merchants, nobles, and kings. Trade had exploded. Venice, Florence, and Genoa were the beating heart of the world's economy. But there was a problem. Money was moving faster than anyone could keep track of it. Merchants had warehouses full of goods, ships full of cargo, and piles of receipts, but no unified way to understand whether they were actually profiting or losing. Every deal was a gamble. Every record was a guess. And for those bold enough to lend money or invest in long voyages, a single miscalculation could erase everything. That's when a man in a brown robe stepped into the chaos. His name was Luca Bartolomeo de Pacioli, a Franciscan friar born in 1447 in Tuscany. He wasn't a banker. He wasn't a merchant. He was a mathematician, obsessed with numbers, symmetry, and balance. To him, mathematics wasn't just a tool for trade, it was a reflection of God's perfect order. Pacioli believed that if God designed the universe with precision, planets orbiting in harmony, geometry woven into nature, then human affairs, even money, should follow the same divine logic. He spent years studying the methods used by Venetian merchants who developed a clever but secretive system of recording transactions, something they called double-entry bookkeeping. It was a way to track not just what you spent or earned, but how those two sides interacted. Every transaction had two parts, one entry to record what was given, and another to record what was received. Two columns, two truths, perfect balance. In 1494, Pacioli published his great work, Summa de Arithmetica, Geometria, Proporzioni et Proporzionalità, a massive encyclopedia of mathematics. Hidden within its pages, almost like a divine secret, was a small section titled Particulares de Computis et Scripturis, Details of Calculation and Recording. It was only 27 pages long, but it changed the world. For the first time in history, the method of double-entry bookkeeping was written down clearly, step by step, in a way anyone could understand. Pacioli didn't invent it. Venetian merchants had used it for decades, but he codified it, transforming it from a merchant's trick into a universal language of commerce. In his system, every debit had to have a credit. Every exchange had two sides, just like confession and forgiveness, sin and redemption. It wasn't just accounting. It was moral philosophy written in ink. Pacioli taught that to keep good books was to live in truth. A dishonest ledger, he warned, was like a dishonest soul, corrupted, unbalanced, destined to collapse. He insisted that merchants record every transaction carefully, date every entry, and keep their books orderly so that one may see at a glance one stance. In that simple idea, clarity through balance, lies the DNA of modern capitalism. Because what Pacioli offered wasn't just a way to count money, he offered a way to trust it. With double-entry bookkeeping, merchants could finally measure their profits, prove their debts, and share records across cities. Banks could track loans with confidence. Investors could evaluate risk. Trade could scale. Not because people became more honest, but because the system forced honesty through structure. For centuries, kings had ruled by sword and priests by scripture. But now, another kind of authority was emerging, the authority of numbers. And at its foundation stood a friar who believed that order was divine. The timing couldn't have been more perfect. Just as Pacioli's book spread across Europe, printing presses made it accessible to scholars, traders, and future bankers. Within decades, his teachings became standard practice in Italy, France, England, and beyond. And that's when money itself began to evolve, from coins and credit notes into information. A new age was dawning, where the most powerful currency wasn't gold, but trust on paper. And that paper, those ledgers, those columns of numbers, would soon give rise to the first true banking dynasties, families who turned balance sheets into empires. Among them was one name that would dominate Europe for nearly 2 centuries, a family who mixed faith, politics, and finance so skillfully that even popes owed them money. They were the Medici, and they would turn Pacioli's divine logic into worldly power.
When Luca Pacioli's book began to spread across Italy, something remarkable happened. For the first time in history, money could be tracked, analyzed, and multiplied with precision. The merchant's gut feeling was replaced by mathematics, and whoever mastered that math controlled the world. And no one understood that better than the Medici family. In the 1400s, Florence was a city of marble cathedrals, bustling markets, and secret deals. Artists painted for glory, popes schemed for power, and merchants traded not just silk and spices, but influence. At the heart of it all was Giovanni de' Medici, a quiet, calculating man who saw what others didn't, that trust could be bought, and that balance sheets could build kingdoms. He founded the Medici Bank around 1397, decades before Pacioli's book was even written, but his descendants would perfect the system using those same principles: accountability, transparency, and above all, balance. The Medici didn't conquer with swords, they conquered with ledgers. Instead of marching armies, they opened branches in Rome, Venice, London, Bruges. Each branch kept meticulous double-entry records, ensuring that every coin, every loan, and every favor could be traced and justified. It was revolutionary. No other institution in Europe had a network so vast, so organized, or so quietly powerful. Their records were clean, their methods precise, and their influence absolute. Popes trusted them, kings borrowed from them, and the Medici made sure both were forever in their debt. When Giovanni's son Cosimo de' Medici took over, the family's fortunes exploded. Cosimo wasn't just a banker, he was a political genius who understood that wealth, when hidden behind generosity, became untouchable. He funded artists, architects, and even the church, all while keeping a tight grip on the financial strings behind every grand project. The great cathedrals of Florence, funded by Medici credit. The rise of the Renaissance, paid for through Medici accounts. Even the Pope's war chests were filled with Medici gold. And at the center of all that power was a simple system: debit and credit, perfectly balanced. Their clerks were trained like soldiers. Every entry was written in clear Latin, every account double-checked, every number verified. Mistakes weren't tolerated, not because of pride, but because in a world built on trust, precision was survival. It's almost poetic, really. A friar had given the world the spiritual idea of balance in finance, and a family of bankers turned it into a weapon of control. By the 15th century, the Medici were untouchable. Their wealth bought them titles, influence, and even the papacy itself. Two Medici men, Leo X and Clement VII, would become popes, ensuring that the church's money flowed through Medici hands. But here's the most fascinating part. Their rise wasn't driven by greed alone. They truly believed in their own way that wealth could serve faith, that patronage of art, science, and religion was a divine duty. Cosimo once said, "It is better to make enemies by doing good than to gain friends by doing evil." Under the Medici, banking became more than trade. It became a tool of civilization. Through their ledgers, artists like Botticelli, Leonardo da Vinci, and Michelangelo found sponsors. Through their credit, cities were reborn, and Europe was pulled out of the Dark Ages into the Renaissance. And yet the irony remained. The system built by a humble friar, designed for moral clarity and order, had become the engine of immense power and corruption. Because where there is trust, there is also temptation. Where there are ledgers, there are secrets. And as the Medici Empire grew, so did its enemies. Rival banks, envious nobles, and even the Vatican itself began to question just how much influence one family should hold. The same system that built their fortune would eventually contribute to their downfall. But their legacy, the combination of faith, mathematics, and money, had already changed the world forever. From this point on, Banking was no longer just about storing wealth, it was about creating it. And that idea, born in monasteries and perfected in Florence, would soon travel across oceans, shaping empires, revolutions, and eventually the modern financial system we still live under today.
When Luca Pacioli wrote his book Summa de Arithmetica in 1494, he probably had no idea what he had just unleashed. To him, it wasn't a declaration of war or empire. It was a handbook for order, for clarity, for honesty in trade. But ideas are like seeds. Once they leave the hand of their creator, they grow into things no one can control. And Pacioli's idea, the balance of debit and credit, began to spread faster than anyone could have imagined. At first, it was just among merchants of Venice, Florence, and Genoa. Italy, at that time, was the beating heart of trade. Its ports connected east and west, carrying silk, spices, and gold. But soon, they began carrying something far more powerful: knowledge. Merchants and scholars copied Pacioli's system, translating his work from Latin into French, German, Dutch, and English. Every city that embraced trade, Antwerp, Amsterdam, London, embraced his method. Every port, every ledger, every deal began to follow the same rhythm. One side for debit, one side for credit. It sounds simple, but it was revolutionary. Because this wasn't just bookkeeping anymore. It was infrastructure, a shared language that connected merchants across borders and oceans. It made transactions between strangers possible. It made scale possible. You didn't need to trust a person's face, only their records. And that single shift from personal trust to numerical trust built the modern world. Think about that for a second. A priest's system of balance became the foundation for capitalism itself. Every bank, every corporation, every government budget today, all of them are built on the same principle Pacioli taught 5 centuries ago. Every action has an equal and opposite entry. The system brought stability to chaos, and chaos to stability. Because as it spread, it began to fuel something new: expansion. When Spain and Portugal launched their ships toward the New World, they weren't just bringing sailors, they brought accountants. Behind every voyage, behind every cannon and cross, was a ledger. When Columbus set sail, investors in Seville expected returns, and those returns were tracked line by line, just as Pacioli prescribed. It was the same story for the British East India Company, the Dutch VOC, and the French Compagnie des Indes. They built entire empires not through armies, but through entries. The cost of ships, soldiers, spices, slaves, and silver, all reduced to columns of numbers. Money became measurable, power became predictable, and faith, the kind that once filled temples, transformed into financial confidence. A merchant in Amsterdam could invest in a voyage to Asia without ever seeing the ship. A banker in London could fund a war in France without leaving his desk. And every transaction, every risk, every profit could be balanced, justified, and recorded. The world had become one giant ledger. But with growth came a new kind of temptation, one Pacioli, in all his piety, could never have imagined. Numbers, after all, can tell the truth, or they can hide it. The same double entry system that kept merchants honest could just as easily be used to disguise debt, inflate value, and manipulate trust. It became a mirror, reflecting both morality and greed. And that duality, the divine and the deceptive, became the soul of modern finance.
By the 1600s, banking families in Amsterdam and London had turned Pacioli's system into an industry. They built public banks, issued government bonds, and invented stock markets. Even the church itself, once the guardian of faith, began to borrow from the very system it inspired. Every cathedral, every crown, every colony now had one thing in common: an accountant behind it. The balance of the world was no longer spiritual. It was financial. And yet, it still followed the same sacred rule Pacioli had written down centuries earlier. Every credit must have a debit. Today, when you open your banking app, when you send a digital payment, or when a company announces its quarterly earnings, you're seeing echoes of that same principle. The ghost of Pacioli lives inside every transaction. From Wall Street to Silicon Valley, from credit cards to cryptocurrencies, all of it still depends on balance. A priest from the 15th century laid the foundation for the most complex, powerful system humanity has ever built. He gave the world the ability to track its soul, one entry at a time. But, as history would prove, not everyone who inherited his system would use it for good. Because balance, once broken, doesn't just destroy numbers. It destroys nations. And that's where the next chapter of money begins, when the quest for balance became a race for power.
By the dawn of the Industrial Revolution, the world had changed beyond anything Luca Pacioli could have imagined. The temples were gone, the monasteries were silent, and the sound of prayer was replaced by something new: the hum of machines, the clatter of coins, and the frantic scratching of pens across ledgers. What once began as a tool for moral clarity had evolved into a weapon of limitless ambition. The double entry system, born from the hands of a priest, had built empires, toppled kings, and now it was building something even greater: the modern financial system. The same method that once guided monks and merchants now powered industrial titans, stock exchanges, and global banks. Every factory, every railroad, every trading company lived and died by its balance sheets. Pacioli's principles had conquered the world, but the spirit behind them had quietly vanished. Because somewhere along the way, the balance shifted. Money was no longer a means of moral order. It had become the measure of worth itself. In London, Amsterdam, and New York, men in dark suits now played the role once held by priests. They didn't pray in cathedrals. They gathered on trading floors. And instead of confessing sins, they reported earnings. Their God wasn't divine. It was profit. But the irony was brutal. The system they built, Wall Street, the stock market, global banking, still carried Pacioli's DNA. Every financial statement, every corporate audit, every bank transaction still followed his sacred rule. Every credit must have a debit. But what he meant as a reflection of moral balance had become a formula for speculation and greed. By the 19th century, the financial world had outgrown its creators. Colonies became markets, nations became corporations. The invisible hand of faith that once guided trade was replaced by the cold logic of numbers. And still, people trusted the system, just as their ancestors once trusted the temple. Because, whether it's a priest behind an altar or a banker behind a desk, the foundation is always the same: trust. But trust is fragile. It bends under greed. And when it breaks, the whole world feels it. The Great Depression of 1929, the global financial crisis of 2008, countless scandals, collapses, and bailouts, all traced back to one simple truth: the balance was lost. Pacioli's system was perfect. It was humanity that corrupted it. He designed it to keep man accountable, to remind him that every gain carries a cost, every success a responsibility. But as money became abstract, digital, invisible, infinite, that accountability faded. We built skyscrapers of finance on foundations meant for faith. And yet, even now, his fingerprint remains everywhere. When a CEO signs a quarterly report, when an accountant reconciles the books, when an AI algorithm tracks global assets in real time, They are all repeating the priest's ancient ritual, balancing the ledger. 500 years later, we still live inside Luca Pacioli's idea. The same system that once lived in monasteries now pulses through global markets, guiding trillions of dollars every second. But here's the haunting question. Would he recognize it? Would the man who saw balance as a reflection of divine order even understand what we've turned it into? The truth is, Wall Street was built on theology as much as arithmetic. Behind every transaction lies a moral choice, one that the priest from Tuscany hoped we'd never forget. Because money, at its core, isn't evil. It's a mirror. It reflects whoever holds it. In the hands of monks, it built cathedrals. In the hands of merchants, it built empires. And in the hands of modern man, it built the world. But balance, true balance, was never meant to be about profit and loss. It was about meaning, about remembering that for every credit, there is a debit, not just in ledgers, but in life. So the next time you open your bank app, see your paycheck, or read a company's earnings report, remember this: you are looking at the echo of a monk's prayer, a centuries-old reminder that numbers are never just numbers. They are reflections of human faith, trust, and morality, written not in stone, but in ink. Luca Pacioli didn't invent money. He invented accountability. And that, more than any empire, any invention, or any fortune, is truly what built the modern world.
So what can we really learn from all of this? From temples and monks, from ledgers and skyscrapers, from faith and finance intertwined across 1,000 years. It's easy to think money is just paper, just numbers, just screens filled with balance updates. But behind every currency, every trade, every transaction, lies something ancient, something deeply human. Trust. That's what the priests of Mesopotamia guarded. That's what the Knights Templar carried across continents. That's what Luca Pacioli balanced with ink and faith. And that's what modern banks still depend on today, whether they admit it or not. Strip away the technology, the interest rates, the stock tickers, and banking is still what it has always been, a belief system, a shared agreement that promises mean something, that value exists because we trust it does. But Pacioli's true message wasn't just about mathematics. It was about morality. He believed balance wasn't just for ledgers, it was for life. That in every credit, there's a debt, not just of money, but of conscience. That profit without purpose is imbalance, and imbalance always collapses. He saw accounting as a mirror of the soul, a way to measure not just wealth, but wisdom. And when we look at today's financial world, where fortunes rise and fall faster than empires ever did, his lesson feels more urgent than ever. Because the truth is, modern banking isn't evil, it's powerful. And like all power, it reflects the intentions of the people who use it. The system that once built temples now builds data centers. The ledgers once written in ink now live in algorithms. But the principle that balance must be maintained hasn't changed in 500 years. So maybe in a strange way, the priest who invented modern banking didn't fail. Maybe his system worked exactly as he designed. And it's up to us to remember why it existed in the first place. Not just to make money, but to keep humanity accountable to itself. Because at the end of every ledger, beyond the profits, beyond the losses, lies a truth as old as civilization. The pursuit of balance isn't just how we build economies, it's how we build meaning. And that is how a priest's prayer for moral clarity became the invisible heartbeat of the modern world. If you enjoyed this deep dive into the hidden story behind how faith shaped finance, the hidden origins of modern banking, make sure to subscribe for more historical stories that reveal the truth behind the systems we live in. Because sometimes the most powerful revolutions begin not with a sword, but with a pen.